Okay, we're going to be getting this meeting started in just a moment. It's pretty exciting to me. Why? Because I think as people who work in the real estate industry, we oftentimes forget that the opportunities that we're bringing to people, we should be enjoying ourselves. Don't you agree? Only answer is yes. Um, so we're going to be speaking to a couple of people today who are absolutely phenomenal at what they do. One of them is Dirk Nygaard. They call him Dirk in Denver. He's a very successful realtor there. He has about 50 or 60 different investment properties, mostly residential. And we're going to be talking about just how he does that, where he actually seeks his information, and how he goes about getting all of this, taking a look step by step of how he does the things that he does. So, with all that said, we're going to get started right now. Here we go. Hey, Dirk. Okay,
Morning.
we're getting started just right now. I'm going to let the mob in here, and
Awesome.
I got my little promotion going on here, so I figured I'll be shamelessly promoting this whole thing. But yeah, we've got a bunch of people that are actually coming in, and we're going to be talking about the stuff that you've invested in. Are you ready?
I'm ready. Let's do it.
Is your lovely wife joining us today?
She's not here right now. We'll see if
Perfect.
she
Got to take,
works her head in.
no added pressure on you. I didn't want to mess with you too much.
That's
Lovely
right.
woman, by the way. I liked talking to both of you very much yesterday, and
Well,
so
thank you.
I thought that that was very nice. But yeah, we've got 13 so far. So everyone's going to start pouring in. And we got the autopilot on here recording everything, which is going. We even have Lavette who's joining us. So we're going to have a bunch coming in very shortly. But first, let me just get them in. So here we go. Okay, folks, everyone's coming on in here. Going to be learning some good stuff. One of the things that I find interesting is that we individually help people get very rich selling real estate, but oftentimes forget that we could do this for ourselves as well. And I think that that's really kind of important to to get the point that there's really great opportunities out there for us to be able to capitalize on. And that's exactly what this meeting's all about. We're going to be talking to Dirk in just a second. I'm trying to get all these autopilots coming in here. This with the, as much as I love AI, these things could be a real pain in the ass. Just want to let you know that. Okay, we're getting them in. Dirk, how you doing?
I am very good. Good morning.
Good morning. Good morning. I'm glad to have you here. We do have, I believe, Greg's going to be joining us today talking about some of the stuff that he's done. And I know that Michael Varoukas is a real estate investor as well, and he's going to be coming in here. And so there's a bunch of people that actually have a keen interest on this. Of course, the number one viewership is what goes into the archive every day that this is archived and put onto our website, bogan.ai/video for you to see. Also, as you can see, my book. Prompt to Close is now available on Amazon. All you have to do is scan that QR code or go to bogan.ai/book and you could download your copy, or you not download, you could order your copy. It's under 20 bucks and it gives you all sorts of information gleaned from the wisdom of all these great people who come to the mastermind. And if you do decide to buy it, if you don't mind giving me not four, a 5-star review, along with any type of commentary, that would be very helpful. I am trying to get this to rank on on Amazon. And in order for you to do that, you really do need to get this. I know we released it yesterday. I think we had about 15 or 20 sales yesterday, which is very nice. Again, I'm not so looking to get rich off book sales. What I am looking to do is get a much deeper, higher profile out there with the hope that we continually get new people coming into the mastermind, which is going to be really great. So, that said, let's bring it on into Dirk. Dirk, I know a lot of people have been here regulars here, so we're not going to harp too much on how long you've been in the business, but why don't you give us the 5 mile view? Like, how long have you been in real estate, and walk us through that a bit?
Yeah, so I've been in real estate just shy of 20 years. If you count my childhood with a little family background in fix and flips and property related ventures, it's probably a little over that time frame. But investment real estate is actually what pulled me into the brokerage side of the business. So it was back in the recession. I had two business partners. We were both in college, or we were all in college, buying electronics and clothing items from China, sourcing them and reselling them online. We made enough money to say, where's our true passion? And that was real estate. We all had a little bit of knowledge in it at the time. So we took those funds and dumped it into our first investment property. Um,
And
our,
which was what? And I'm going to pull that up in a minute. If it was
yeah,
that the property you sent me?
it is. It's one
Okay.
on Moline Street. Um, it was a HUD owned home at the time. And the three of us got together and we just kind of looked at each other with big, fearful eyes and just said, hey, can we make this payment if everything goes south on it? And you'll show it up
Yeah,
there.
keep
But
talking, keep talking. I'm pulling it up here now. So
yeah,
so so yeah. So you all said that you were going to be able to, do amazing things. Uh, and so where did it come from? What was it like? Talk to me about that.
yeah. So it was a HUD owned home. It needed a lot of improvement, and we took about 2.5 months of just sweat equity, hands on the property to improve it. It was our first learning lesson of renting properties, um, learning the hard way that people's problems and emotions will always be projected on yourself. So we had some very trying trials for that.
Okay, is this
Still,
it?
that's the one right there.
So this
Yeah,
beauty was the
that's
start of your real estate empire, huh?
that's the gem. We still have it to this day.
Okay, so it says here, so let's, I'm sorry to back up, but I think this is like some important stuff, and I want everyone to get this. You sold electronics that you bought cheaply from China. You used the proceeds to buy this house in 2008 for $68,000, 68,000 and change. Did you finance it at the time?
We did. We financed. I think it was like a 95%
Loan to
to
value?
value loan, and we took a rehab loan out on the property. I think it was about $12,000 at the time.
Oh, so you didn't need to sell any shit. I mean, now you're over the money, right?
Yeah, yeah,
Oh,
no,
okay.
it's one of those that the appreciation has definitely made it a really phenomenal deal over time. So
So great. But so you find, and in this time, I mean, interest rates have gone, like this. Obviously, you got in historically low interest rates. Did you do anything with refinancing or trying to recapture some of the investment prior to selling? And if you did on this or anything, if you could explain to everyone how that worked and what that meant.
yeah, so in this one, we actually sucked out some of the equity about 3, 4 years into the property or into the project, and we deployed those funds towards another investment property. So this was really the start of building our investment portfolio.
It's Sunrise Fort
Okay.
Lauderdale, but I didn't see it like that.
Okay. Somebody else has their
If you're
phone
closer to the
on.
ocean,
You
you
don't,
can.
hold on. I can't see who it is because I'm on here. If anybody's unmuted, if you don't mind muting because we're in the middle of this here. Okay, thanks. So yeah, so you have this, and again, Dirk, we talked about this prior to this meeting yesterday. If I ask you anything too personal, just say, Ed, shut the fuck up. Don't ask me something personal.
No
Was,
problem. Let's do it.
was there how much money did you actually pull out of the house over time? What in the form of refinancing?
We really just did the one initial refinance. I believe, if I remember right, it was around 60 or $70,000 that we pulled out.
And you,
Um,
you used those proceeds to grow more, to fix. What was your thing?
yep, yep. So we took those funds and we went into another property, another project.
And was
Um,
that the one that you sent me?
um, it's not, but that was kind of the evolution. I think that was our fourth or fifth property. Um, and then we started taking some of our smaller projects and trading them through 1031 exchanges into larger projects.
Okay.
So
So we'll get into 1031s and the structure in a little bit. But again, just want to say you let God bless America. You let the great American economy make this property go up in value. You bought it here. You financed it with money that wasn't yours. You remember what the interest rates were at the time?
I believe when we got this one, it was right during the recession. I think it was around 6.5%.
Oh, so it's okay. Well, I was expecting you to say less, but you're right. Around that time, it probably was. So you got that. When you refinance, what did you refinance in? And what's your interest rate now?
Yeah. So we've since have paid this project off.
Perfect.
Um, but I think our refinance rate was around mid fives.
Mid fives. Okay, so good enough. So you use that, you pulled the money somewhere else. Let's take a look at the other properties that you gave me here. Here's a 1031 exchange. And what I love about this graphic, again, guys, it's down and dirty. This is not the prettiest graphic, but I love that for that reason. You got Oswego, Everett, and Nevada. And why don't you explain the evolution of each of these things, starting with the first one?
Yeah, so that was our baby of the project. So in 2014, we purchased that as a single family property. Already had a tenant in place. We didn't hold that one very long, but once the tenant moved out, we did a little value add improvement to it, resold that property, and we utilized the 1031 exchange process to transfer those funds tax free into a little bit of a larger project. So you'll see the Everett property in the middle.
Okay,
We
but hold
transferred
on.
into that
So the 105, was that cash or was that debt?
one. That was cash.
That was cash. So 105, and we say you fixed. Was it paint or was it you put 5, 10,000, 20,000 into it?
Yeah, I think we put about 10,000, 15,000 in that one. Replaced a bathroom, redid some kitchen cabinets, paint, texture, flooring. Um,
Okay.
a decent remodel.
So okay, cool. So then you took the proceeds, which again, we don't even need to worry about profit here because it was a 1031 exchange. Explain to everyone again, I believe most know what this is. There are some non-real estate people here. Can you just briefly tell everyone what a 1031 exchange is?
Basically, it's just a tax avenue to take your profits from one property and put it into a larger real estate venture. It avoids the capital gains that you potentially could have, and it avoids any depreciation recapture that we use as a tax revenue or advantage while depreciating the assets to offset a lot of our rental income.
Okay. And your depreciated asset you did as a straight line 27 and a half years? Is that
On this one I did kind of the new strategy is the accelerated depreciation approach, but on this one it was very typical.
okay? So again, just to clear everything up for everyone, when you actually depreciate a property, what you're really doing is saying the government's going to say, okay, we're going to you can't depreciate dirt. You can only depreciate the fee, the hard asset of a property. And you could say if you paid $275,000 for a property over 27 years, you could write off effectively $10,000, 27 and a half. You're going to be able to do that over that time frame. And therefore, the monies that you take in as profits will arrive to you without, through a depreciation. There's a whole depreciation recapture. Again, I don't want to get too complex with all of this. And indeed, AI is very good at helping explain all of this to everyone. Again, I had to throw that little plug in for the AI. But I want everyone to just have an understanding that what he did was a very intelligent tax strategy, which is kind of important to this. So you purchased this for 306. You had proceeds, let's say after expenses. We had the money. So how much did you put into this Everett property? You purchased it for 306. Was any of that financed?
Yeah, so about 200,000 of that was financed.
Okay. Okay. So even though you basically just took what you purchased and used those proceeds, you kept the other money.
Yeah, so we didn't have to come out of pocket with any additional funds while purchasing a larger project.
Got it. So you kept that for 5 years. That went from 306 to 825, fourplex, which means you had four different tenants. Any broken toilets, any pain in the ass, any crazy people getting, arrested in the middle of the night, anything like that?
Every night around 2 a.m. generally is when something would go wrong with it.
Okay. So that's and are you the NRA and do you vote? I'm just kidding. You don't answer that question. But serious, was there a big any real heartache in the management of that property? I think everyone here would be curious.
Yeah, Finding tenants is always the biggest challenge. We've learned over the year you never trust the previous landlord. It's the one prior to that is who you really want to talk to,
Good move.
um, because they have nothing invested in getting a bad tenant out of their property and into yours. So the research, the due diligence on the back end of who your tenant potentially will be is the largest challenge.
Great.
We've worked with a lot of people with government assistance, which is nice for guaranteeing rent, but the individual can always be the challenge, and you never know who you're getting. So yeah, we had a lot of ups and downs in that property over the years. But towards the end, we really evened it out, and it really normalized, stabilized, and that's what helped bring us a better value when we sold it to the next investor.
Okay. So now you went from there and you sold it to the next investor. What was, and obviously we get to the good stuff here, the 825,000. Well, let's talk about the sixplex for a second. You purchased it in 2020 for 925,000. How much down? How much financed?
Yep. So we continue to roll all of our profits from the last property. So the Everett property went straight into the Nevada home. So we financed about $500,000 on the Nevada project.
You put $500,000 into that, but okay, so but all of that came from the proceeds of the previous one.
Correct. Yep. So we were still pretty much zero out of pocket at the time.
Great. And now is this a fair estimate, 1.2? Is it based on what? Based on cash flow or what's
That's actually a realistic resale value on the open market on that. Um, I don't pay quite as much attention as a lot of people do to cap rates and the multiplier until we start getting into the bigger projects for value adds. This one was more of just a strategy of moving properties up in size.
okay? As you're speaking, I'm just trying to figure out returns here. And sorry, I had this on a sheet, and of course I couldn't find it as you were speaking. So I asked the question here: if I invest 105,000 now, and it's worth something 12 years later, so the result, you had a 22.6% annualized return on your investment.
Yeah.
Just yeah, I'm sure you were thinking about that, but again, I wanted to share that with everyone. Pretty good, pretty
Yeah.
good, right?
Really good. You, you
And
know,
best of all, the story doesn't stop there.
no,
This is just where we are. So what I love about this, as down and dirty as it is, it really just tells a story. Guys, let me see where's everybody is. Hold on a second. Math tells a story. Business tells a story. That's one of the things I love about it. It's absolutely beautiful because you could really see step by step. It's very easy to look. That was a 12-year process for him to have an annualized 22.6% return. And he got the phone calls. It was a pain in the ass. Are you willing to do the work? Are you willing to put it in? Maybe, maybe not. And again, I won't fault you either way. I'm just presenting this as an option. What I love about this is, Dirk's a great guy, corn-fed kid, really seems like always like a happy-go-lucky kind of guy, very smart, and he's actually worked this out and worked it out quite well. What else? There was okay. We do have some questions. I figured, yeah, I am talking too much. Thank you for Dina for asking questions. Go ahead, Dina Ulrich. You got to unmute there.
Hello.
Yeah.
Hi. Sounds absolutely like incredible to me, so interesting. And of course, we all come across properties and we're like, wow, that could be great. Would the numbers work and whatever. When you're talking about moving, you're saying every time you've rolled the profits from one property into the next. But you said one renovation you did, you spent like $10,000 and put in a new bathroom, a new kitchen, flooring, and texture or something. I'm like, how are you able to do it for so little? I just replaced countertops in my house, and that would have eaten up, a third of that budget. And are you using the profits from the prior one to do work in the next one? Because I feel like every one of these properties, when you buy it, they always need updating, and you get a lot more. Have you found in the properties that you update, you get a lot more in rental income, or, they're easier to rent, I would imagine. Just more the nuts and bolts of how you're actually doing it all.
yeah. So in the beginning, it was a lot of sweat equity. It was boots on the ground, and we did a lot of items ourselves. Basically, we only had to purchase the materials, which we want something durable, but we understand it's going to be replaced real fast. So the countertops that went into these projects are drastically different than what would go into our home. So that was the biggest part. Evolution as we were getting bigger and transferring into properties. Yeah, the value add and tenant improvement, really you can see a great multiplier on what your property will be worth long term. So that would start to dictate what do we do on the property. Can we get to the next pricing tier? Do we get a better tenant by remodeling and improving the units? So to finance that, sometimes it comes out of pocket, but for the most part, we just would finance those type of repairs based on cash flow coming in from the tenants. Only one time did we really have to go crazy on it, and it was that Nevada property on the second slide. The old owner had owned it for 20 some years. He would collect rent by just sitting on the front step in a lawn chair on a couple certain days of the month, and people really took to his ways and did not like us.
That's the life Eitan wants to live. He wants to sit on a lawn chair and collect the rent. We were talking about that. Okay,
it truly was that. Yeah, he would walk up with empty pockets, and he would leave with $8,000 in cash on any given day.
So get a shawarma. I love it.
Yeah. But tenants got to know his ways, and they didn't really like us running it like a business. And in investment real estate, it's hard to take your emotions out of it, but that's really where landlords get stuck, is when they start getting emotionally tied. So we were running it like a business, and unfortunately, we literally had to evict 5 of the 6 tenants in there about 4 to 6 months into the project. So that one became dig into your pockets. Let's figure out what we're doing. And it had went a lot time without improvements. So that was a major remodel all at once.
Yeah. I got it. Is it easy to evict in Colorado?
No, not too easy.
I've always been under the impression it's so simple to do it in Florida. I told the story once. I once walked in on a home invasion with one of my properties in Miami. That was not fun. And the guy was like reaching into his pocket, and there's no fucking way I'm going to die over a property. So I'm like backing out, and he's like, "Oh, Airbnb, I'm here." I'm like, "No, you're not. This is, I went behind my car. And I found out that they had been squatting, and that the squatters' rights in Florida are much deeper than a lot of people think. It really is. I've always thought of like Florida's on your side, and they really are compared to. So that was interesting. Let's just take a look at another property. He did this, 5 more times, and now he owns the Empire State Building. Just kidding. I just thought I'd throw that graphic up there. But, but that is the idea, guys. I mean, all joking aside, that is the idea behind all this, is to keep growing to the next level. Where is it here? Nope, not that. Not that. There we go. So now let's we're getting bigger and bigger. Hope the Empire State Building didn't kill the thing. Talk to me about this property.
Yeah, that's one of our recent projects. It's in Minnesota. It's a 24 unit apartment complex. So that one really is purchased based on the numbers, what kind of revenue is coming in. We saw some really good value add options in this property. And we got a pretty good sales price per door. But this is one of those avenues where we're really seeing what can we do on the upside potential over the next 2 to 5 years. And then we'll trade that one into something bigger, more than likely. This is also a real tax revenue machine with the appreciated depreciation schedule that you can take on these properties. It's really going to allow me to wipe out a lot of my income just based on this property. So it's going to tie me more and more to this venture, and it's going to force me to do a lot of business maneuvers on it. But this is starting to get to where there's some real savings and some real revenue coming in.
Sure. So can we talk numbers on this one?
Yeah, a little bit. I'll be shooting from the hip, but let's do it.
Let's do it. Okay. So 24 units, you said what was the total purchase?
1,776.
1776. So we're talking about
About
geez.
72,000 a door.
Okay, good. And what kind of cash on, well, forget, and how was it financed? I need to go in order here.
This one was an assumable loan. The
Oh,
previous owner was actually pulling out of Minnesota their investments and heading back to California. So they took a little bit of a bath on it, but really what happened is they had used it as a tax machine and write-off. So they had finished their depreciation schedule, and it was just kind of a write-off for them at that point in time for the exit.
okay. And how much cash did you bring to the table?
That one was about 380,000.
Okay, so and what's your annual cash? What is your projected annual cash on cash return? Or what is your annual profit?
Yeah, so I mean, we're going to be about a we're going to be about a 7.5 cap on that one, so about 150,000 of projected profit.
Okay, and that's including obviously. So when we talk about cap rate, we're talking about the return after expenses, but before debt.
Correct.
So and how much debt do you have to, what are you left with after the debt?
Yeah, so our debt on that one was about 1.2. And right now it's an interest only loan. So, there's about, let's see, 15, 8, there's about $8,000 a month of revenue that'll come in
After
after
debt.
everything's said and done.
Okay, so
Mhm.
96, that sounds, it's great. Listen, fantastic stuff. I'm curious to hear that. We got a question from Hassan. Hassan, you want to unmute yourself and introduce yourself to everyone?
Yeah. Good morning, everyone. Hassan Bazi, realtor, Southeast Michigan. Hey, Dirk. Quick question. So, when you're investing in markets outside of your own, like how are you determining what markets to go into, and are you property managing on your own or hiring a local property management firm?
That's what I
Yeah.
asked. I love it. Great.
um, and this was actually a conscious decision to get outside of Colorado for us because it does force us to rely on some others and hire a manager. So we just call it managing the manager. So that is one of the challenge as we're looking and exploring different markets is saying, hey, who can we trust that can actually manage this for us? And worst case scenarios, what happens if we get stuck? How can we manage it? Um, so this one truly was just based on the numbers. And once we went under contract, that was us flying into location. We had 3 days of just interviewing different managers, inspections on the property, basically just making ourselves comfortable with the investment. And since then, we'll probably never see it again, eyes on in reality. And it'll just be managing the manager. So we have a monthly call. And initially it was a little bit more than that, just to make sure that we were turning it over and we're getting it back in shape. Minnesota has some pretty heavy tenant laws, so the city is actually a little bit more involved with inspections on the property. So that's one of the bigger headaches. Taking over something that has a little bit more distressing type environment, but we're working through it. So it's actually starting to normalize faster than we were expecting. So
Sure. Okay. Wow. Like really, really amazing stuff. That's to me the Achilles heel because just to digress a little bit here, I had investment property in Indiana. Mrs. Edwards was one of my tenants. I was buying single family homes, paid $13,500 for the property. And it was cash flowing $550 a month. The goal was to buy 1,000 of those. I mean, that's huge. If you really look at the numbers, that's really big. And it was entirely paid for the South Bend Housing Authority, which was a Section 8 housing. So, backed by government. A lot of people get scared of Section 8. Don't be scared of Section 8. The right tenant typically wants to do everything they can to get their government money. I mean, this is government dollars at work. Political comments later. It's a terrible thing. I get it, but it's legal. We did it right. Here's the thing. Lovely lady, Mrs. Edwards. Harmonious relationship for a couple of years with Mrs. Edwards. Mrs. Edwards then gets a boyfriend because Mr. Edwards had died, I suppose. And the boyfriend, not so great. This guy decided that he wanted to be a rock star or a rap star or something, and he took a can of butane and sprayed it all over the garage door, which was a detached building, and it put his initials on it and decided to play the guitar or dance around or who knows what the hell the guy was doing. He lit it on fire and the thing burned to the ground. Now, insurance on these things are very, very difficult. Okay, and I want to get to that insurance question with you in a second. And by the way, Greg Coggins and Michael Varoukas, since you're both investors as well, I hope you could hop in on this conversation because I think it's kind of important. But how important is the insurance to you? Again, that was something that I really didn't recover from, at least from an investor. I didn't recover. I mean, it wasn't the worst thing in the world either, but it was really such a wash. And the whole goal to get multiple properties. I ran around Indiana for like a weekend looking at all these properties, and I saw a group of Israeli investors, a group of French investors, and then a group of German investors, all with their clipboards. And I'm like, ah, shit. If I'm seeing all these guys running around, the cat's out of the bag. I mean, these guys are in Indiana as well. We know that, and to me, the biggest challenge was being so far away. The multiplex is a better idea, though. So, that's just a cautionary tale for everyone. Talk to me briefly about insurance, and then Greg and Michael, if you want to jump in, that would be great. How important is that to you, and has that been a factor?
We haven't run into too many issues with insurance. Denver, you never pay for roofs out here. Hailstorms always take it out. So that's just something that we're mindful of, and we try to control our policies. First and foremost, we just really make sure every tenant, before they ever have keys in their hand, that they do have renter's insurance and that we're listed on it as additional insured. That is one of the most important ones. And then outside of that, we just make sure we have adequate coverage that protects the investment if the worst happens. We were talking yesterday, and we did have one tenant where I guess he was smoking meth or something like that in his bed and passed out and dropped whatever his flame source was on the bed and just lit the bed on fire. And he woke up and ran out, and the whole unit was a total loss. They didn't have insurance that would cover it. And fortunately, we did have good enough coverage that our provider took care of it. And it was mainly smoke damage. But
whoa, you mean to tell me a guy that smokes meth actually didn't have insurance?
Yeah.
What a shocker! That's really okay.
It's the same circumstance. It was a boyfriend to the tenant. So yeah,
the boyfriend. But just get women. Men suck. Just get women as tenants. It's much better off, and you definitely have to have a sign in each unit, no meth smoking, that would be good. Greg and Michael, unmute yourself. Oh, for John, we'll get a question for you. Then Greg and Michael, I want you guys to chime in on the stuff that you've done. Go ahead, John. John, tell everyone who you are, where you are.
Hey there, good morning. John Bainson here. I'm in Connecticut, Fairfield County to be exact, and I work at Compass, and I've been part of this group for a while. My question, back to the property management piece, was do you pay a flat like 10% on rent roll to get all of your services from the property manager?
On smaller projects, we're probably closer to the 7 to 8% flat rate. On the Minnesota project, I believe we're at 3.5%, something like that. But we have, and I think we're 75% of first month lease up.
And do they provide like financials for you as well, or are they like they're collecting and depositing the monies and managing all maintenance, right?
Yep. They do everything on site, anything that we need. Usually there's an hourly rate if they are on site. So there's ways that it does add up, but as you get multifamily, it definitely gets cheaper for management services. And we're right at the cusp where it just makes sense to have somebody that's a live-in property manager and kind of a handyman. So right around that 20 door project is when you start thinking about bringing somebody actually on staff full-time and being there.
Okay. Yeah, my little piece, and I guess maybe others have experience with this, is kind of focusing more on a single door, but with a short-term rental with a property manager that specializes in short-term rental, because I think you can sometimes get a higher level of revenue um, with similar maintenance. But you're also, I guess it kind of takes away some of the vacancy concerns.
Sure.
Yeah, and I was operating 5 personal Airbnbs at one point in time. I think down to one right now, and you generally see about a 30% bump in your rents. So if you're in kind of that desirable area, you want to do something a little more special with your property. You want to have more hands-on cleaning, maintenance involved in it. We've had really good luck doing short-term rentals.
Mhm.
Denver's changed their laws where you can't necessarily do the short-term side, so we're generally 30 days plus
Mm.
in the Denver area. But when it was true short-term, there was some really good revenue to be had there, and the property was taken care of much better.
Sure.
Yeah.
So, John, I want to get to Michael and Greg as well. I could circle back to you. Just a thought with regard to Airbnb and something to share about. I found there's a guy that I know who's done some clever investments. We've spoken with Hassan before about unique financing that's cultural. It's also in my book. Prompt to close. Anyway, but so I think that we've got some interesting stuff there. As far as Airbnb, when there was a Orthodox Jews have to walk to synagogue and they have to do so many, many, many days a year. Family will come and stay with them, and they'll literally pack up and 20 people in a room or something like this. So I knew a guy who had bought a couple properties in areas that nobody would really want, no pool, nothing desirable about the house, made it into a kosher kitchen, now has an Airbnb that actually serviced that market. Again, be very careful about fair housing law and all of this, but it was interesting that he had a strategy and a structure. And I'm looking at that right now as they're building Chabad right near me. Um, and there are some properties that are quite possibly affordable. Again, the numbers have to work, but if you can capitalize on a strategy, and that rolls me into quite nicely Michael Varoukas, who, not Jewish, he's Greek, but I think the guy has some interesting. Michael, how are you, buddy?
Great. Thanks. You got a great thing going on here. I'm happy when I'm able to join. You were asking about insurance and concerns. I think that's what it was.
Well, yes, that, and for you to just walk us through the couple of the investments you've made.
So I from Queens. We had bought a house in Queens in 1998, 2000 for $200,000. My mortgage was, 150 grand at the time. Paid it off in about 6 years during the countrywide eras, and then we took money out of our house and bought our first investment property in Nashville, Tennessee. And then this is again 12 years ago in Nashville when prices were still great. Things were just starting. They still were going crazy there. And from there, we bought another condo and then another condo. And then we partnered with somebody in an Airbnb. And then I ended up buying a co-op on 57th Street in Manhattan. And then I bought a condo down here in Las Olas. And I bought two more down here in Fort Lauderdale. So it amazing that me and my wife are very happy that, from our first investment and some input over the years through, additional cash, we were able to build up these series of properties, buying and selling. Some of them we still have, a lot of them we still have, but it was an interesting journey. So I'm just a simple guy who bought a house and kind of just worked it. I wasn't an investor. Real estate turned out to be the best investments, period, for us. And we always worried about insurance because we didn't convert them initially into LLCs. So they were under our name. So we would get umbrella policies, and then we would, we bought condos because condos required less work. We could put management companies in place. I didn't have to worry about a house. And for us, it worked out perfect. I've had the most incredible tenants over the past, 15, 16 years now. And I've had really no problems. And knock wood, I knock my head because I've had incredible stories from friends of mine that have properties that have had the worst problems. But insurance was always a concern. And then recently, over the past few years, we've just converted everything to LLCs to kind of take that pressure off us personally because our value has grown now.
How many units do you have now?
Eight, I think eight or nine. Nine.
And what's the cheapest versus the most expensive? if you don't mind me asking?
The cheapest is a co-op on Billionaires Row in Manhattan for about 400,000. And the
Hmm.
most expensive is one of the properties we bought for 350 is worth about 1.2 in Nashville. So all
So,
of them are worth way more than we bought.
so hold on. What, Billionaires Row, how much is that worth, you said?
400,000, it's a co-op.
Co-op, okay. Oh, it is co-op. Okay, we can get into that.
I mean, we
I don't
bought it
want to.
before. I don't
I
know
don't
how
want to
it'll
open
get
that can of
now.
worms. That's another structure, right?
In
You
New
know.
York, it is. It's a weird structure in New York.
Yeah,
Everything else
that's
is a condo.
that's. I was trying to explain air rights to a guy in Indiana, and he just couldn't grasp the whole air rights thing. It was
We're in a
actually a
land
very
lease
smart guy too. He
situation.
just couldn't believe it.
We're in a
Um,
land lease situation there right now. So it's a big battle. So it's interesting. If we survive this land lease, the property will be worth $1 million. So it's it was a big investment. It was a risky investment 3 years ago, no, going into a land lease position, but the turnout could be amazing.
okay, very good. Greg, you want to chime in? I know you've got some properties as well.
You know what? This is probably a bigger topic than I can do in 60 seconds, but well, I know it's a bigger topic. But for the younger guys, something to look into. For me, I was single, so it was easy for me to do this. What I did, my very first investment property was a quadplex. And it was in really bad shape and it was 50, so two units were rented and two were vacant when I bought it. I did a 203K because I didn't have the cash. A 30% down payment was out of my reach. Well, that might have not been out of my reach, but then the rehab on the property was out of my reach. So I did a 203K, moved into one of the vacant units. I was successful in renting the other vacant unit. Um, I completely redid my unit and then got a vacancy, moved into the next unit, redid it. So I was always working on the unit that I was living in. Um, I did this across, I think it took me about 8 months, if I remember right, to get all four units done. I did have to do one of the units while the tenant was in place. So she got a significantly reduced rent and loved the fact that I was redoing her unit. But in any event, long story short, is I rehabbed all four units. After I cheated a little bit. After 11 months, I moved out. You're really supposed to be there for 12. But I got away with cheating a little bit. And I think I turned that property, I held on to it because it was cash flowing very well for, I guess, about 2.5 years. And then sold it and made a significant chunk of change, both with the cash flow as well as the resale. So it's something to look at if you're single or if you're not single and have a partner that is willing to go through this with you. You don't have to rehab the unit you live in. It's just financially more makes more sense because the other three, 75% of the building is making some of the payment for you. But anyway, it's something to look at. Um, it works very well, and it pays big returns.
Sure. And right now, again, I know you only have a couple of units at this point, right? Yeah, that's
I
fine.
want one two-door commercial property and one executive home that I'm holding on to because it's paid for and it's pulling in about $4,000 a month on rent.
You see that? Okay, guys. Look, we've. It's very easy, by the way. I want to stress all this because a lot of people are like, "Wow, I'll go buy property right now," and I'd love for you to do it. I think it's great. I think that we are uniquely positioned as realtors to see the deals that are there. And I can't tell you from where I sit, and I know a lot of people who sell real estate. There's so many opportunities that people are just too scared to actually do. I get it. I can't say with a straight face that the risk isn't there. I can't tell you that failure is out there. It really is. But I think you need to manage risk. You could also get hit by a bus. I mean, God forbid. You could also have a real, all sorts of issues could actually happen. This life is not a guarantee. But I think there's ways of managing the risk. Okay, we're going to get to just a couple more things. Dirk, Greg, and Michael, give us, if you couldn't get money from a bank and you didn't have the cash, give me one or two ways that you would actually pick up. You weren't expecting this question, Dirk, when we went over it. None of you are. So if you say, oh, and I don't know, that's fine too. But I'm just curious, if you had to get cash, because a lot of people said cash is the issue, where would you go and get cash from? Michael, why don't you go ahead? I can see you have
I'd
your.
sell, I'd sell some of my watches.
Okay. That's, and
I got enough.
he has beautiful watches. You should go pawn it, I guess, right?
No, I wouldn't pawn it, but I'm just saying if you need to
Okay.
come up with 100, 200,000 cash, for me, that's some quick access. It's better than gold coins. At least I get to wear them.
Okay. Very good. Greg?
Are they Apple watches?
No.
No, they're nicer than that. Greg, if you had to come up with cash quick, any thoughts on that?
Um, so I've got a builder that I've partnered with a couple of times, and he has told me point blank that that he'll provide the cash investment if I find the right investment for us to partner on. So that would be one avenue. Um, I am a big no debt person. So at least now I am. I didn't used to be, but so I'm not looking to owe anybody,
Hmm.
um, institutionally maybe, but on a personal level, other than this one builder, and we've got a project in Alabama that we're working on, and it's that situation. He came up with the cash, other than buying the raw land. So I had the cash to get us there, but in terms of all the expense of the building, he's doing the cash to make that happen, and he's going to get a larger chunk of the return, but I'm still going to get paid.
Get creative. That's what I love about all this. Last one, Dirk, take it home. No bank, no money. You got yourself, your wit, and a laptop. Where are you getting the money from?
Yeah, kind of on Greg's terms, you better have a good investor that you trust, that they value what you bring to the table, and you're able to do a lot of legwork. But there's no free lunch.
Hmm.
You can get some real creative financing, but you better make sure you protect yourself because, yeah, the debt can consume most people. But find a good partner.
Sure. Okay, we're going to get to wants, needs, and brags. Guys, this is great. And we need to revisit this next week before we get into it. The topic, your pipeline is lying to you. Your pipeline is lying to you. We're going to be able to pull out just where they're lying to you, how you're going to be able to extrapolate the best possible leads from that pipeline. Of course, we got a little dose, a little peppering of AI. Also, it's worth mentioning today that some big news happened in AI. Many of you probably don't realize this. Dirk, I don't know if you heard the news. You're probably going to be very sad if you haven't. Sora is no more. That OpenAI is ending Sora, and that's the first casualty in the AI world. Aton and I oftentimes talk about when things are going to be
Why?
happening. It's because it's a fucking money loser. I mean, all people do is go, Claude and Anthropic came along and gave a real business tool that people are using and doing stuff with. You know, we got Dirk busy accepting Academy Awards with this thing. They don't see that as a business thing, and I won't mock Dirk for it. I do the same thing. You can take a look at me, like, skydiving and working out like I have any muscles anywhere. So that's it's something to be aware of. That's one thing. The other thing that
Wah,
all of you should be aware.
wah.
Wah, wah, wah. The other thing everyone should be aware of, Claude by Anthropic just introduced a remote very similar to some of the other tools that you're going to be able to remotely control your AI, your laptop or desktop with your iPhone. I am doing it. I'm playing around with it now and focusing on it. I never want to teach something until I'm absolutely proficient at it, but we will have either a mastermind on this or maybe a one-off meeting on an unscheduled one for those that really want to nerd out with me on these topics. And then one other thing I want to share, everyone knows that we've got prompt to close. It is the AI playbook for real estate professionals, available now on Amazon. You could, if you go to bogan.ai/book, you'll see our little website here. Not completely ready for prime time here, but there's links to Amazon. You can book me as a keynote speaker if you want, which is great. And we're adding all sorts of stuff. Also, within the book, I've got stuff that I tell everyone you need to use, ChatGPT Plus, Claude Pro, and a lot of the other tools. We're also adding video walkthroughs. Again, this is just getting launched right now, and we're going to have some regular updates to this to be a companion with the book. So it's 1995. You know, Aton brought up, well, Ed, everyone comes to the thing. Why don't we buy it for them? I will do something for you. I need the sales. And anyone who's known me for a long time, you give me an inch, I'll give you a mile. I really mean that. I need the sales. I need the 5 stars, and I really would appreciate it. And more importantly, I don't even need to appreciate it. You guys are going to love it. It is, you know, and I'll walk you through all this. Was AI instrumental in building the book? You're goddamn right it was. It was so important to building the book. All these meetings are being recorded, as you know. All these meetings get transcribed. And all these meetings, particularly in the last 3 years, have had a strong AI focus. So I had literally 150 hours of content that I was able to extrapolate and find out exactly what you will most likely want to hear about. And I have some great, I've got quotes in it from Dirk. I've got quotes in it from Greg. I've got quotes in it from Hassan. I've got quotes in it from a bunch of you. I'm very, very proud of it. And this hip replacement really proved to be a great time to actually, you know, spend a full week doing nothing but finishing this. You know, I've been trying to finish it for a long time. Very, very proud of it. Again, it's on Amazon. Please, 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 if you make,
So
make a
I
motion to
put
buy
the
it.
link to Amazon there.
Yep. Okay. So, and the website as well, we're going to be making updates to it. There's going to be all sorts of stuff that will be going on with that. I really do want to raise the profile. I really want to use it as a means of getting new people and interesting people into the mastermind. And I think that could help all of us because really, as we get people who are so diverse, I mean, look at this. We've got Dirk in Denver. And we got North Carolina, and we've got California, and we've got all New York. We got all these different places, and all of us have one thing in common: the headache of being a real estate professional. And it's a wonderful headache, but it's something that we all need to hopefully learn and leverage one another. Jorge's been in the meeting now for a few months, and he said to me the other day that he was just so thrilled to be able to pick up the phone and call people who've walked the path before him and have been able to do so much. And that's what I'm really trying to accomplish here, guys. Everyone in this meeting is nice. If anyone's not nice, let me know. I will fire them. Okay? It's, you know, I will find out why they weren't nice, but everyone in this meeting is very, very nice. We're not pushing or selling anything to one another. We really are trying to help one another, and I think that's great. Okay, wants, needs, and brags. Let's do this briefly. This is the time in the meeting to talk about what you want, what you need, and what you'd like to brag about. I told you what I'm bragging about. What would you like to brag about?
I'll go.
Please, Hassan.
Not a brag, but just since we're talking about investments, so if anyone on this call is interested in investing in Detroit or Southeast Michigan, I've worked with quite a few investor clients from San Francisco Bay Area, Miami, even internationally out of Argentina. And as a result of that, I've built out a property management piece of my business. So I'm property managing properties for those clients in Southeast Michigan. So if anyone's interested in investing in Detroit or Southeast Michigan, reach out.
Isn't that fabulous? And that goes along the lines of what we said last week in our five-year exit strategy. So good. Always very impressive, Hassan. Thank you. And moving right along to South Florida, Zainab, come on, take it away. What do you got?
Hey, Hassan, first of all, my brag is Edmund Bogen. Like, I'm so proud of you, so proud of you. I just bought the book. I'm so excited for it to be coming my way. But I'm gonna have to see you soon so that you actually sign my book, right?
And I'll do even more than best of luck. Believe me, I'll do something. I'll make it like 2 sentences. How about that?
Thank you. Hassan, I think I met you at a CCIM meeting.
I think we did
at the Hard Rock Hotel in Miami.
Yes.
Amazing. How are you doing? I haven't
I'm doing well.
spoken with you so long.
Small world.
So Hassan and Zainab will lead the group hug after this. Okay.
Yeah. Okay. So my brag, it hasn't quite happened yet, but I am looking to be getting a listing for an office And I think that office will serve to complete my CCIM portfolio. I've completed all the educational requirements. I need to complete the portfolio to sit for the exam and get my pin, which by the time I do, I swear I'm getting my pin made in like ruby and diamond because that thing is so difficult to get. Like it's really a big steep thing, steep hill to climb.
Good. That's amazing. Okay. So you got to
And send me your commercial referrals, people, like here in South Florida. Like, I'd love to work with you. Oh, and I might add that because I'm working towards my portfolio, I am these days extremely generous with my referral percentages.
Okay.
Yeah, good to
We're
know,
talking
right?
about a little cash money there, guys. Okay. I like
Yes,
this. Thank you for that. Who else?
absolutely.
Who else? Time to brag. Time to request. There's no shame in this right now, guys. We're all making a living here. Please.
And I have a request.
Okay, Greg, go ahead.
Build a notification component into your website.
Okay, explain. Aton's listening.
When you guys make changes or add content, um, versus me putting a 30-minute block in my calendar to double check, to go and check and see what's changed, um, just allow us to register for notifications where you ding us or email us, whatever, when you make a change on the website.
Okay, I like it. Let me ask you this,
What a good idea.
it's a great idea. What do you think about text messages? Is that too much? I'm fearful. There's something called Twilio that Aton was kind of proficient at, and we keep fighting like brothers do about what we should do with this Twilio thing. Do you think that that's something that should be? Will I become a nudnik or annoying or a pain in the
Ed
ass?
believes it's too invasive. I love it.
Twilio has been around for a long time.
Mm.
I'm not adverse to text messages. I'd like the option of text or email or both. But yeah, I'm not adverse to text messages. Hell, you text me already.
Well, again, but well, look, we'll catch up at some point because again, everything that I do is really not unique. It's all coming from you guys. So if you give me the ideas, we will study it, learn it. If it's something I don't know, I will wake up in the 3 o'clock in the morning with an idea and literally go and study it to be able to perfect it for this. So thank you, Greg. You've been a good friend and a great participant, and I appreciate you very, very much. Mark Lawrence, looking very strong there, big guy.
Just another day at the Fat Boy Fit Club. I'm Mark Lawrence up here in New York. We didn't mention actually much in this presentation the passive investment in real estate. If anyone's invested as an LP in larger projects, that's something actually I got involved in, which led to me to becoming involved in the private equity side and development in the Carolinas. So if anyone has any questions about investing, as an LP or in funds, definitely reach out. Happy to discuss my experience, in that as well.
Amazing. Okay, guys, this is the wisdom of people who came before you. I mean, this is great, great stuff. Before you go investing in all this, you could talk to every one of these people are so accessible. That's what's amazing. Unless they tell me otherwise, mostly, yeah, want to give me a call. Nice people, successful people, if you really have a sincere question, are usually willing to speak about it. Just because you're trying to rip off and duplicate an idea. I didn't make that term, rip off and duplicate. People think R&D is research and development. No, it's rip off and duplicate. Rip off and duplicate Dirk's idea or Greg's idea or Michael's idea. It has nothing to do with their success. It has nothing to do with stealing anything. It's just, replication. Otherwise, I showed the Empire State Building. It never would have been built if people didn't do that. Think about it. It never would have been built. You have to follow on the coattails of what other people have done in the past. Okay.
One more seed.
Go ahead.
Kind of following up on Mark, my company, the brokerage that I'm affiliated with, the president, CEO is a brilliant man, but he came up with this strategy and it has been very profitable. And that is, he has begun working with different builders and purchasing their model homes in new communities so they can take that off their books and then turning around and renting it back to them on a triple net. and collecting the rent for as long as they need the model. And then when they're done, it's an open-ended lease, so they can cancel with a 90-day notice. When they're done, we turn around and sell the properties. It's 100 each group, there's four right now, four each year he adds one. Model home investment LLCs that are 100 members, which is kind of the cap before you get into the whole investment. What am I looking for? The Wall Street mess. You can have 100 members, and it's been extremely profitable. So check with your builders, see if they want to sell their model homes and rent them back from you.
Get beer and chips, guys. It's worth talking. Wine and cheese, whatever it is, virtually. Okay, anyone else? Okay, guys, this was a great meeting. Again, next week is going to be on Wednesday. I'm going to talk with Eitan. We might throw in Friday as well on this one. Your pipeline is lying to you. What that actually means, what you could do to be able to really have a full understanding of the pipeline. This is something that every single one of you, in my experience, has neglected, and it's a bad thing. That at some point we've just not given the love that we need to give to our pipeline. It is everything. It really, truly is. Right after this, I'm going around and making my way to my pipeline. I want to find out where the failure points are and all of this. There are ways and effective ways of managing it. And while we've talked about this topic kind of peripherally, I would say, I would also tell you that it's something that really does get neglected. So with all that said, you guys this is my Wednesday vitamins. You really feel, you are the wind beneath my wings. Okay, a little too poetic. Did you ever know that you're my hero? Okay, now everyone's leaving. Anyway, guys,
We'll see you, buddy.
good to see everybody. Michael, let's get together soon. Renat, the same thing. Dina, I'm going to give you a call later. Eitan, I'm going to give you a call in a bit. And thank you so much, Dirk and Michael and Greg, for participating.
And by the way, all you guys that invest on all those properties, your stories were great. You're my heroes.
Yes, it really is.
Thank
it's
you
great
so
stuff.
much.
It's great stuff. You made it very real for all of us. And thank you, Zainab, for buying the book. Thank you all. Thank you, Dina.
My pleasure. I'm super excited for it to arrive.
And I'll let you know when I'm down in Miami next. I'd love to see you.
Yes, absolutely.
It was a great meeting. Thank you, Edmund.
Thanks, everybody. Okay, take care. Bye.
Bye.